Hello, everybody. Stephen Mead here with Domicile real estate for people who love houses. This is our Southern California housing market update for October 13th, 2020. Again, this is for Southern California, so we base our data on Los Angeles and Orange counties. This data is basically through yesterday. And, we are in sort of a bit of an unusual market, and I'm going to sort of preface our presentation on the data slides by talking just that we have some sort of conflicting things. And, one of the things that I've talked about in the past, if you watch our videos, is the notion of timing and that all of the statistics don't always move at the same rate. And what I mean by that is that things like days on market is a great reality check, but it's a little bit of a delayed statistic. Another thing that is sort of interesting is the timing between new listings coming on the market and properties going into escrow, right? The reality is that even in a very, very hot market, that is anywhere from 4 to 10 days delay. So that means that even if you see inventory go up, that may not reflect new houses going into escrow until next week. We have to be really careful about that time relationship. Without further ado, though, I think things are changing a little bit. And, we do have some things to talk about in the stats this week because I think it's important, whether you are a buyer or a seller, that you understand these changes that we're kind of starting to see in the stats. And so the first thing that we've got here is our new listings chart. And, I like keeping up some of the older data from way back when, because I think it really gives us some historic reference here. So remember, this is like talking about the supply side of the market. We're talking supply and demand. Listings are your supply. And, we saw things go and then they kind of started declining, which is a very typical pattern in fall. And then those listings have sort of shot up. And this is our under $1 million category. And by shot up, where have they shot up to? Well, they've shot up to about the same level as the rest of the summer and where we were 2 or 3 weeks ago, a little bit shy of that. So shot up is, of course, a relative term. This is an incredibly strong level of new listings for being in October. And I'm gonna explain that in a second. Even if we look back here at our $1 to $2 million price range, we kind of see the same thing. Those new listings are up. I'm not sure if there's a particular reason for that, whether it's just people looking at median home prices or whether a lot of people have been thinking about making a change. Maybe they're afraid interest rates are going to go up and they realize we either need to sell our house and get another one now or we're not going to be able to do it. But if we look and we compare to 2019, I think this graph really just illustrates how different and how unusual 2020 is. And, typically during an election year, we actually see activity totally subside in the fall. So this year is very, very unusual in a lot of ways, not just because of COVID, not just because of the pandemic, but also because of the way the market is reacting. I mean, if you look at this, so in this past week in Los Angeles and Orange County, we had 1,955 new listings input into the MLS versus 1,290 in 2019. I mean, that is just an absolutely nuts, that's a 50-60% increase over last year. And I think you really just have to sort of take a step back and just take a moment and appreciate just how different 2020 is versus last year. Now, if we change gears, we look at our supply side of the equation, right? Or we look at our demand, right? This is consumers, this is new properties going into escrow. And what we see here is a little bit of a drop versus last week in our under $1 million, maybe a slightly bigger drop in our 1 to 2. This is very consistent with fall, but I want to take a second and talk about that timing issue, right? So if you are in an inventory constricted market, and believe me, we have a buyer we are working with in the San Fernando Valley right now. That is very much an inventory constricted market under $700,000. In all of the valley, just as an example, there are only 14 houses under $700,000 with pools that are active. So, we might see an uptick in this inventory of new things coming in, and you might look at this chart and say, well, wait a minute, Stephen, I'm seeing the number of new escrows going down. But if you go back, and I'm going to look back here, if we look at last week's new listings, they were way down. So if we have this effect where new listings and new escrows the new escrows were actually, these escrows are the response to last week's new listings. And when you think about it, that makes sense, right? We can see why this might drop, and we might see a rebound of this new escrow number next week. And I'm really curious to watch that and see if that happens, if we do see that rebound. Now, if we do our same comparison with 2019, it's still a much stronger year than 2019, but not by nearly as much as it was. And in fact, you notice in 2019, we actually had a run on listings. The market just got sucked up here because this number is actually higher than the new listings was, meaning more properties went into escrow than went onto the market in the fall. Last year was kind of an interesting year. We sort of had a slow summer and rallied in the fall. But I think this is the reason why I'm not worried, right? Like when people tell me, do I think there's some big slowdown coming? The answer is no, because this number is still very, very strong, even versus a strong buyer fall. We still see a good number of listings coming up in there. And you'll notice 1527, if we look back to charts here, that is actually not that far off from the number of new listings last week. So I'm not worried about this new escrow number dropping a little bit. I don't necessarily think that's a trend yet. So we're going to keep and watch and see, does that rebound to coincide with the new listings that came on the market in the past week? Now, if we look at our absorption rate, as you might expect, it has slipped, right? It has gone under 80%. And down here in our 1 to 2 million, it's actually gone under 60%. So I would say that $1 to $2 million market, if you are a buyer in that market, now is a pretty good time for you. It may still be slightly a seller's market, but there's a much more pronounced balance of supply and demand in a market like that. If you're in this under $1 million market, you know, this might mean the difference is this past week, maybe you only noticed 7 offers on the homes you wanted to buy instead of 14, but you were still competing in multiple situations, multiple offer situations pretty frequently. What I think is interesting too, one of the things that we've talked about the last couple of times is this idea that this average pending list price is really leveled out. And we actually saw a decline and we were a little worried. Well, guess what? It's rebounded back up here to 638. You know, really since August, we've been hovering in the same kind of numbers. I'm a firm believer that our market is sort of stabilized a bit in that sense. You know, it's still very brisk, but I don't think we're seeing these price jumps happen every single week that we've been looking. And that's really kind of what we were seeing back here in this June, July timeframe, which equated to August and September closings. If we look at our list to close ratio, and this is one of my favorite charts, I'm going to go off share here. You know, you have to be careful with this data because there's a lot of ways to misinterpret this, and there's a lot of things that move this. But really, the list to close ratio is looking at what is the level, what happened versus list prices of the homes that have closed in the last week, meaning like how close were they to their list prices. And remember, this is their final list price, not necessarily their original list price. So if you put a home on the market for $600,000 and nobody was buying it, you lower it to $550, and now you got 10 offers and you close at $460, that would definitely show an over list price sale, right? But if we go back here and we look at the data, I think what's really important is looking at this progression over time, right? I mean, we were in the 99% range, 98% range back towards the beginning of this. But if you look now, I mean, this has been a steady increase. And what this tells me is it tells me that demand is still incredibly strong for homes. You know, we'll start to see this number really ease off below 100% when we see that demand and supply balance coming more, more into balance. I think what this means is even if sellers are greedy, and one of the things we've talked about is that maybe sellers are listing a little too high. Well, this chart actually counteracts that automatically because it looks at their final list price, not necessarily their original list price. If we look at our pending list price for $1 to $2 million, we see a similar effect, right? I mean, things dropped and then we kind of rebounded in this 1.4 million. They've really been kind of holding steady in that amount over the last month. I'm not seeing a lot of price movement happening at the moment. I still am seeing a very competitive market, but I think your buyers are kind of reaching their limit of where that equilibrium price point is. Now, for our days on market, right, this is kind of an overall health figure. when we're talking about our market. This is like a reality check. If every other piece of data says the market is brisk and days on market just jumps to an insane level, well, that might mean there's a problem lurking somewhere, right? Like, why all of a sudden our house is sitting on average? And so one of the things that we look at is this is our days on market for new escrows. And the reason why I like to track this for new escrows is, people can put whatever asking price they want into the MLS. I could have a home that's worth 600 and I can list it at $1 million, right? And that's great and all. But what I'm really curious about, where the meat is where is the market for the homes that are actually selling, right? How long are those houses sitting on the market? How long are the ones that people are actually going into contract on? And if we look at that, that number has actually dropped. And I believe we are close to an all-time low for our under 1 million category. And it remains low for our 1 to 2 million. To me, this indicates if you're expecting a day where suddenly buyers are scarce and sellers are desperate, I don't see that happening anytime soon. I think things might get a little bit easier going into fall. We'll have to see whether these trends continue as far as this inventory. Do we see, new listings coming in more than new listings going under? Will that build up our supply? We'll just have to see if that's true, and maybe that stays on market will move. But right now, that number is still heading downward. And this is for the homes that went into escrow in the last week. So this is fresh data, the most recent homes going under contract that we are talking about here. Finally, let's talk about our affordability, right? And this is based on our Orange County homes, single family and condos. And, these numbers represent the first week of the month. And then we look in the past week and you see something really fascinating happening. We had a bit of a lull here in 1020, meaning it dropped below 90% of where payments were 2 years ago in June of 2018. And, if you're reading this chart, it still says payments on average or on a median priced home are less than they were 2 years ago. But if you look at the past week, we see a spike back up there towards that 95%. This is still great news for buyers because it means you have essentially had home prices not really inflate at all as far as payments go in the last 2 years. But, you have to understand that, we've been seeing a couple things bump up against here. I think this 90% number is too low. I do think we'll see some erosion of that, especially if interest rates bump a little bit. I think the market won't drop in price. It'll just absorb those increases. Anyhow, I want to thank you for watching our Southern California market update this week. We do this every week. It comes out on Tuesdays with data through the preceding Monday, so data through yesterday. If you are a first-time home buyer, let me also recommend that you watch our first-time home buyer market update. It's a little bit briefer. We talk about both the affordability and the availability of homes in the entry-level market segment. So it is special statistics just for our first-time home buyers. That actually comes out every Friday. We publish that information as well. And that we post it to Facebook, and we also do it on our YouTube channel. Speaking of our YouTube channel, if you are a watcher, but you are not a subscriber and a liker, please do go ahead and subscribe to our channel and hit that notification bell. Also, we welcome comments and questions. We are here to help you on your real estate journey by helping you make better decisions by having solid data and analysis with which to make those decisions. Anyhow, once again, Stephen Mead for Domicile Real Estate for people who love houses. We will see you next week.